Yes, your voice is okay. And screen is also visible.
Okay, thank you. So let's start today's Bazaar with Charcha. First of all, sorry for getting late for 2-3 minutes. So today is Friday, January 10, 2025. Our first Bazaar pe Charcha in this calendar year. And market is from the almost last couple of months showing negative side trend. Already fell around 12-13% from recent all-time high. So before starting Bazaar pe Charcha further discussion, disclaimer, registration granted by SEBI membership of BASL and certification from NISM in no way guarantees performance of the intermediary or provide any assurance of return to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Our company name, registration number with SEBI, address, compliance officer, details, everything given. So, this table is regarding sectoral index, including benchmark index, Nifty 50 and Sensex. As you see here in this uh, uh, table, that in last 1 week, all sectoral indices, including benchmark index, has generated negative return. And likewise in monthly, 3 month, and 6 month also, I can say. In 6 months, pharma, except pharma and IT, all the sectoral indices have generated negative return. And further, as per O'Neill methodology of market direction, Nifty 50 and Sensex both are in rally, that is confirmed uptrend. Now, confirmed uptrend because last week there was a rally happened that was more than 1.7% along with comparatively higher volume. So we follow the rule, and just following the rule, even though after that follow through day 1.7%, we have changed the market status from this to this confirmed uptrend. Now, after that, again, market entered into sideways with negative bias after taking resistance around 24,200 and currently placed around 23,500. Even today also majority of the time it remained traded in the range of 23,500, 23,550. So we are just waiting. Either it will move or it will turn positive in upside, or suppose it will breach that recent low, that is I think around 24,200, around 23,200 around. Then if it will breach that recent low, then we will again change this market status to a correction. Apart from that, if I talk about sectoral index, so pharma, IT, auto is in confirmed uptrend, and banking sector is in correction, financial services is in correction. So banking has a weightage of around 40%, and it is in a banking and financial services, not banking, entire financial services, 40%, and it is in correction. FMCG, another major one, that is in rally attempt. Today it is showing some positivity. Today it was, but it is still. Energy, another major sector, is in correction, and metal is in correction. So if you see here, like if we distribute the market as per market weightage, so only major is pharma and IT is technically as per O'Neill methodology, and auto around 20-25%, 20 to 25% around market is in terms of weightage is in rally, and apart from that, remaining sectors are in either correction or in under pressure, excluding benchmark index Nifty 50 and Sensex, that is rally, just following the rule. So let's move on chart and let's see how market is technically market is placed. Uh, Technically market is placed. So first of all, Nifty 50. Yeah. So Nifty 50, if you see here, so it is now trending below 200 days moving average here. If you see this orange color line, comfortably trending below 200 days moving average. And this recent low, which is 23,263 here, we are just waiting for this breach of this low. Suppose it will breach this particular low, and again we can say that we will move the market direction into correction. But it has not breached, so maybe we are waiting for the. Oh, sorry. So it has not breached, so we are waiting for that. Otherwise, upside 24,200 is a level, because if I draw a trend line here, let me draw a trend line. This particular trend line, if I draw from here to here, just so this particular downward sloping trend line, as well as this black color, that is 50 DMA, 100 DMA, 50 DMA, and then this price pattern. Everything is placed in this particular zone, and that range is approximately 24,200. This particular range, 24,200. So that is why we are expecting that now from now onward, 24,200 is a key level to watch, because unless and until it is trending below 24,200, we can say that market may remain trading in jittery manner. The day it will cross 24,200, then we can expect that there is a hope of sustainable reversal in the market. So technically, currently 24,200 is a level to watch. Suppose it will cross and hold above that, then we can expect positivity. After that, 24,800, and followed by in upside. But recent 24,200 is a key level to watch. In downside, this 23,400 is a key level to watch, because 50-week exponential moving average placed in that range, 23,400. And suppose it will breach 23,400, then we can expect further downfall toward 23,000 kind of zone. So maybe I can say that here downside 24,400 followed by 23,200 is a range to watch in downside, and likewise 24,200 in upside is a level to watch for upside breakout toward 24,800 to 25,000 kind of level. Otherwise, currently from the last few weeks, I can say almost 2 to 3 weeks, market is not market has not crossed or not trading above 24,200. So maybe trend is a little bit negative with sideways. So currently, unless and until it is trending below 24,300, maybe negativity is there. But the day it will breach further 23,400, more negativity will be there toward maybe 23,000 at least. Currently, currently it is negative. So let's see how things will improve in coming days. Apart from Nifty, if we talk about Bank Nifty, one second. Uh, Apart from this, yeah, one second. What happened to my mouse? Yes. So apart from this Nifty, let's move on Bank Nifty. So Bank Nifty has already breached this 50 DMA. Sorry, 200 DMA. Nifty Bank. So Nifty Bank has already breached this 200 days moving average couple of days back. Even today also, a majority of the day, it remained traded below 200 days moving average. And but but finally it has closed around that. Another thing is that this, see, this particular line that I have drawn, this particular line. So if you see this price range, this is the major price range from the last almost 6 7 months. This Nifty, Bank Nifty remained traded in this particular zone, and that zone was approximately 54,000 in upside, and this 49,500, I can say 49,500 is in downside. This time from the couple of days, it is breaching 49,500, but not closing below 49,500. Even even today also, if you check uh, uh, price trend in Bank Nifty. So majority of the time it was remained traded below 49,500, but the close, it was closed around 49,500 today. So from now onward, I can say this 49,500, and we have already mentioned, not now or not, but from the last few days, we are consistently mentioning 49,500 is a level to watch. So suppose from now on or from today onward, suppose it will remain traded below 49,500 on sustainable basis, then maybe more negativity will be there in Bank Nifty, and then we can expect this Bank Nifty may fall toward 48,500 or maybe 48,000 kind of level. But still there is a hope for revival. We can expect that some uh, choppy trade, and suppose it will bounce from here, then obviously expectations are there that it may bounce back, but it is not bouncing at least current level. So maybe 40 below 49,500 negativity will be more there. More negativity will be there in downside. And suppose it will bounce back here, then one can expect this particular zone, that is 100 DMA you can expect, and 100 DMA is placed in the range of 52,000, 52,200 kind of zone. So suppose it will bounce back, will happen, then we can expect for 52 to 52,000, 52,000 to 52,200, and suppose it will remain traded below 49,500. So one can expect toward 48,500 followed by 48,000 kind of zone. Overall trend, sentiment, momentum on daily chart, weekly chart looks negative. So let's see, things will improve. Just keep watching negativity. Possibility of going down is quite high compared to going up at current point of time. And further, one thing that in the beginning of this calendar year, I was trying to analyze the market a little bit of long-term perspective, at least on monthly and quarterly perspective. So it seems that maybe 24, this particular calendar year 2025 is not going to be smooth, and especially banking, IT is not looking that much attractive at the current point of time. At least first 6 months, I can say, first 6 months of calendar year. So maybe market is not showing that much sound vibes for this calendar year. So it is very difficult to generate positive return, or I can say consistent return in this calendar year. But yes, this particular opinion is based on currently available data. Suppose if data will change, then our opinion will also change, no doubt at all. And that is the wise decision to change the opinion instead of sticking to your old opinion. So, but yes, currently it is data, all the data points as well as market, including Nifty, Sensex, IT, banking, financial services are not looking that much attractive at current point of time. But let's see how things will improve in coming days. So one thing is that we have to be very cautious while taking long trade at current point of time. Okay. Now, uh, Rahi, can you take few sectors? Then I will again come back.
Yes, yes. Thank you, Paul.
Yeah, 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 Tisha, thank you.
Okay, so let me take first sector from my side is Nifty Pharma. So if you see Nifty Pharma from the last especially here in the month of December last week, it has given a very good breakout. If you see, I'll show you a trend line annotating it. So it was trading on the, it was made a nice correction over there, but however, in the last month of uh, December, last third week of December, it has given a very good, nice downward sloping trend line breakout, and it has almost made to the near to its all-time high levels around that level. But however, due to overall weakness in the overall market, from last 1 week, it's making us slightly on the lower side. However, it's still trading in under pressure level, rally level. So one can wait for for the resistance level of 23,800, which may be the hurdle for this particular sector. So on the downside, if I draw a upward sloping trend line from the lowers, so that will be around 50 DMA to slightly below to 50 DMA. So one can follow that level for any change in this particular sector. However, looking at the stocks and the healthcare index, this still looking strong. There might be slightly profit booking might happen due to overall market, but healthcare index as well as pharma stocks are very good, and especially API manufacturing companies are doing very well good. So one can keep track in this particular falling market, especially pharma stocks in this current market. So next one is Nifty Metal. So if you see Nifty Metal, it's making a lower high, lower low price structure. And also if you see on the large time frame chart, so it's a trading at very key level, point of time, key level where it was early breakout which has happened from the sideways trend. So it's currently near to that key support area on the last time frame chart. And the key resistance zone for as of now for Nifty Metal is this 200 DMA is trading well below that level. So one can ignore this level, this sector as of now. So wait for this particular level to consolidate, and if it gives a breakout above that 200 DMA, then well and good. But looking at the current juncture, this index is still it's on a verge of there's a high probability that it might coming into the little more correction is awaited for this particular sector. So if that happens, it's currently trading at near that key support area, that is around 8,500. So if it that levels breaks, then we might see this 7,400, 7,000 kind of level in Nifty Metal in the coming days. So be cautious. It's still trading in lower high, lower lows. Follow these levels on for this Nifty Metal. And the next sector is energy. This sector also it's trading in correction mode. So in almost, if you see 2023, it was outperforming among the all the sectors, but right now it's making a lower high, low price structure. And also if you observe, 21 DMA is taking a resistance around that level, and once again making a correction. So for right now, the level is 34,200, 34,000 is a key level to watch on the downside. If there is no support around that level, then we might see some more taking profits at the higher level will be happening. And especially this Reliance and also oil marketing companies are likely to hit most. So watch out the level. So we might see 30,000 level. If it 34,700, if it breaks that level, we might see 30,000 level in the energy sector. And the last sector, Nifty Realty. There was a hope that the interest rate hike may happen in this particular last month, December, but RBI is still cautious on the inflation note, so it's still trading in the didn't hike the interest rate, but they have cut the CRR. But still, the reality index, the interest rate hike cut will be the key positive news for this particular index to be turned positive from the current level, it has to close above this trend line. So that is around 1150 kind of level. So once it crosses and holds about that level, then we might see a bullish trend to continue to happen. But looking at the chart and the overall market sentiment and the inflation concern in the India as well as in the overall market. Also, yesterday there was a uh, US Fed meeting minutes also they have discussed about the inflation is likely to stay, and they are also interested from cutting to the interest rate from 4 to 2 especially in this particular FY25. So let's see what happens. So the key support area for this particular sector is that is around 9,050, kind of level. So once it breaks below that level, then we might see some more correction. So the next major support is placed around 820 kind of level. So be cautious, watch out for this level, and trade cautiously in this particular especially in this correction phase. So thank you for this. My sector is, I have completed my sector, and I think two more sector is pending.
Okay, thank you,
So,
Trisa.
thank
So
you.
I think three sectors are pending. Uh, First is Nifty IT. So if I talk about Nifty IT, so see, last time this in Nifty IT sector, major trend was started in the month of June 2024, when it has formed a bullish hammer, and then there was a from the level of 31,500, 32,000, and then after that there was a strong rally happen after June onward consistently till December, mid of December, I can say. Now, if you see from the second half of December, this index is showing some sort of correction. First thing. Another thing is that if you draw a trend line, upward sloping trend line, starting from this rally, that is June 2024, connecting this low. So now it has already breached this trend line, upward sloping trend line, black color line, as you can see here on chart. And further, technically, moving average point of view, it has breached moving average, 50-day moving average also. And now, first time after so many months, I can say it is showing little bit of correction. So now, further, apart from this daily chart, weekly momentum along with daily momentum chart is showing some sort of negativity. So suppose from now onward, it will remain traded below 43,000. As you can see, it is placed around 43,100 kind of zone. So suppose it will remain traded below 43,000 in coming days and coming weeks, then we can expect the level of 40,000 kind of levels. That means correction may extend toward downside. Suppose it will remain traded below 43,000. And after looking various factors in this particular IT index, this inflation data, this FOMC cautious approach regarding interest rate cut, new Trump policy is going to be happen. Maybe market is uh, have certain fears of new policy, trade policy, and everything. So after considering all these things, maybe at current point of time, this IT sector is not looking that much attractive, and technically now it has breached 50 DMA, and this supports sloping trend line. So suppose whatever fears are there related to this sector, suppose it will be materialized in coming days, as market is facing or market is already considering that. So maybe this particular index will move toward 40,000 or maybe below 40,000. But time being, from next few Bazaar pe Charcha, or at least for the next this particular calendar year, I can say, uh, not calendar year, quarter actually, January, February, March quarter, we can expect further. Now Q3 results are due on chart. maybe result season will start. TCS Infosys will is are generally early uh, result presenter. So maybe in this weekend only they will publish the return, publish the Q3 numbers, and maybe market will take cues from there. And suppose any or I can say unexpected things will happen uh, on result front, so maybe negativity will extend further. So now we have to just watch on this last confirmation we need. Technically, it is showing certain negativity. Just we are looking for a trigger, and trigger maybe come from the Q3 numbers, maybe tomorrow and Saturday, or maybe next few days only. And then we will have then we will take decisive opinion on this particular index, that what will happen. So it is just a matter of few days, maybe couple of days or couple of trading days. Then it will be quite more clear that what is going to happen in this particular index. Technically, it is looking negative, maybe 43 below 43,000. Any negativity will happen on numbers front, so maybe it will be ready to move toward 40,000. But suppose positivity will be there on the number side, so bounce back will also be there. But technically, it is looking that maybe uh, some we have to follow the cautious approach unless and until numbers are not coming. Apart from this IT, next is auto sector. So Nifty auto, if you see, it is trending below 200 days moving average. Nifty auto index, it is already trending below 200 days moving average here. That is black color line from the last almost 1 month, I can say. And comfortably and trending in sideways zone, and that range is approximately 24,200 300 in upside, and roughly 22,500 in downside. So it is trending into range bound zone, that is around 24,200 to 22,500. That is almost 1,700 kind of zone, 1,700 kind of range, and forming this horizontal price pattern below 200 days moving average, which is generally considered as a negative thing. So now from here onward, this 200 DMA, that is black color line, or I can say 24,200, 24,300 is a level to watch. Unless and until it will not cross and hold at least 200 DMA or 24,200, maybe negativity will be there, or sideways with negative bias will remain in continuation. And suppose the day it will breach this lower band of this rectangular price pattern, that is 22,500. So maybe we can say that is the validation of the negative trend continuation in downside. And then in such case, maybe this particular auto index may fall toward 20,000 also in mid to long term perspective. But short term perspective, I can say, or at least the next couple of weeks perspective, I can say it is trending into sideways, that is 22,500 to 24,200. Above 24,200, maybe positive, it will attract more positivity toward 25,000, 25,500. And below that, suppose it will trending below that, so maybe remain traded in the range of 22,500 to 24,000. And the day it will reach 22,500, then let's see how it will fall in. But currently, it looks like it will most probably in next couple of weeks perspective, it will remain traded in sideways only. And further, uh, Tata Motor and few stocks in this particular stocks is not doing good. So let's see how things will improve. Numbers again, Q3 numbers are on in line. So maybe next couple of weeks and next 2 3 weeks is quite interesting for this sector also. Most probably it will remain traded in sideways from next couple of weeks perspective. Apart from this auto. Next sector is FMCG. I think FMCG is pending at this. Okay. So FMCG. So FMCG currently again negativity are there, trending below 200 days moving average, as Atisa is drawing this black color line, horizontal price pattern I can say in FMCG. First thing. Another thing is that last time there was a lot of data from government spending and everything, that in first half of this the first half of this financial year 24-25, that government had spent less than expected. So there are a lot of spending are happening in this particular second half of financial year, and maybe we still there, it is not materializing on chart on price from FMCG. But maybe I strongly believe that maybe I strongly believe that uh, in the line in coming few weeks, maybe it will materialize maybe after Q3 numbers. First thing. Another thing is that now budget rally will also is going to be happen. Why either upside or downside, that we don't know obviously. So today is 10th, only 3 weeks is there for budget, union budget. So maybe again, government focus will be there for rural economy and everything. And the way this sector or index is showing some sort of positivity, not positivity, but I can say base formation that is in the range of approximately 58,000, to 55,500. So maybe the day it will cross and hold. Even today also it tried to cross 58,000, 58,200, but it closed below that 58,000. So I think the day it will cross 58,200, maybe tomorrow or next day to tomorrow, then maybe one can expect at least a good bounce back rally or good recovery or good reversal in this particular sector toward at least 60,000 to 61,000 kind of level. So positivities are there. Positivities are returning into this, and this rally budget, and then government focus on rural economy, and maybe volume growth also in FMCG. And Q3 numbers will be the triggering point. Technically, this particular level, that is approximately, I can say, levels point of view, this 58,200 is a key level to watch. The day it will cross and hold decisively, when it try to cross in today's trading session also. So maybe tomorrow or next day to tomorrow, it will cross and hold over 52,000, 58,200 kind of zone. So maybe one can expect 60,000 to 68, 61,000 kind of levels, or 61,500 kind of levels in next 2 3 weeks, or pre-budget rally, I can say. So maybe above 58,000 pre-budget value will lead this index towards 61,000, 61,500 kind of zone in coming few weeks. And on the coming 2 to 3 weeks or 4 weeks, I can say 2 to 4 weeks. So we have now discussed all the sectors. Now let's move on query side. So uh, please open that chat. So we will follow the query and we will try to answer the query. So first question is that can we wait for budget or start investing now? It is a very difficult question to answer. Every time is good time to invest and every time is bad time to invest. Currently, you have to be very vigilant because different sectors. This this particular kind of markets are generally considered as a stock picking market. So if your stock picking is good, your sector is good, then obviously every time is a good time to invest. I think if you are looking to invest at current point of time, so you can focus on FMCG, you can focus on chemical, you can focus on pharma to invest at current point of time.
There is one query, any specific sector for the budget?
So FMCG again. chemical sector is looking attractive. Even today, there was a news of this refrigerant gas prices and all, and there are a lot of stocks. This chemical stocks are doing good. So I think chemical, fertilizer, specialty chemical, FMCG, pharma, one can focus on that in budget perspective, I can say, in next a few weeks.
So let me share some
Are you taking?
queries. Yeah, I will take a few queries.
Okay.
So first one is looping, again from pharma sector. So once again, it has given a very good breakout in this particular trend line inside the base after the base formation. And after that, there was a very good run. And from last couple of days, it's especially yesterday, there was a some profit booking happened. But however, it's still trending above its all key moving averages. So one can look for this those who are still holding this stock from the breakout level. So one can wait for this breakout level to retest. So that is around this level. So 2100 kind of level. So one can wait for that level. So once it breaks below this, so breakout is failed and one can clearly exit. So once it crosses this consolidation based low, then we might see 200 DMA as the next target. But until then, it is still trading positive. So if it trades about 21 DMA, it's well and good. The next one is CDSL. CDSL also, if I draw a trend line, there is a horizontal breakout on the pattern. So after a breakout, it's currently retesting its breakout level, and the volume is also, I think, it's on the lower side, so which is well and good. So if it didn't one those who are already holding from the breakout level, so one can exit at least partial. One can book partial profit. Those who didn't book partial profit at higher level, so one can book partial profit and wait for the level for the break below this 100 DMA or this trend line. So if it fails that breakout, then one can exit from this stock right away and wait for the next base to happen. Next one is transformers and refractories. So after the breakout is happened, still stock is trading at almost 40% from the pivot level. So at current juncture, it's we don't suggest that buying at the current level. So better to wait for a little more correction to happen. Fundamentals, technically strong stock. When those who are holding from the much lower level continue to hold. Next one is Gestal. So its stock is trading in lower high, lower low price structure. But if you see, it's making after it's making a rounded bottom base in the lower level. But currently, it's facing strong resistance around 200 DMA as well as this price cluster range. So there might be some sort of resistance around this 100 DMA as well as this price cluster, so that is around 1170 kind of level. So once it breaks out above that level, then we might see uh, next resistance level of 1320 350 kind of level. So until then, it's better to avoid. So better to wait till at least 100 DMA to confirm its positivity sign. Next one is Apollo Tire. So there was a attempted breakout which has happened over here, but it failed to hold that breakout level due to overall market weakness, and also volume is also kicking in from last 4 5 days. So it's better to exit once it was a exit around that 200 DMA. But those who are still holding from that breakout level, better to exit now and be on cash, and it might fall till this 450 kind of level in the next couple of days. Next one is Relaxo Footwear. Clearly, don't buy this stock at right now. It's still trading at making lower low, lower high levels. So better to avoid this stock right now. And there might be a chance, so when the budget happens, budget session, if it very good positive, there might be a chances the consumption stocks related footwears, apparels related stocks might go up. So, but still, it's a wait and watch game. So until then, better to be on sideways. Better to avoid this stock right now and create a watch list on the strong stocks, which is trading above its key moving averages. Next one is Hind Copper. So here also it's trading lower high, lower low price structure, and better to avoid this stock. So stock might fall, trading at key support level. So that is around 230. There was a multiple support level around that level, and there is a huge bounce back. So 230 is a key level to watch. If it falls below that, closes below 230, 225, then we might see 170 kind of level, 170, 175 kind of level in Hindustan Copper.
Okay. So now I am taking ONGC, Coal India, and NTPC.
Okay.
So first ONGC. So ONGC is currently, obviously it is forming lower top, lower bottom formation from the last almost 4 months. But this time, after taking support around 235, it has given good bounce back up to 270. That was technically expected. Now, after touching around 270, 272 kind of zone, today it has formed a negative candle on daily chart, I can say. So I can say that further it is trending around 200 days moving average. So 200 days moving average is currently placed around approximately in the range of 280 kind of zone, and 100 DMA is around 275. So I can say roughly 270 to 280 is a zone where it may face resistance, and most probably this recent bounce back has already finished the rally. So maybe again it will remain traded in sideways with little bit negative bias. Most probably in coming days or next few days or next couple of weeks, it may remain traded in the range of 250 to 270 only, with sideways bias or sideways with negative bias. This particular stock ONGC. So, at least from buying point of view, it is not advisable to buy this stock at current point of time. Another is NTPC. So, NTPC is clearly uh, trending in with negative bias below all key moving averages 200, 150, forming lower top, lower bottom formation. It has breached a big bullish trend, I can say, or upward sloping trend line on daily chart and weekly chart, and continuously forming lower top, lower bottom formation. So, and momentum has lost momentum not only on daily chart but weekly chart also. So maybe negativities may extend further toward at least 300 kind of zone. Current rate is around 320. One can expect toward 300 kind of level. So obviously it is not advisable to buy. Maybe possibility of going down toward 300 kind of zone is quite high from current level in NTPC. Next one is Coal India. Call India again, like you can say, Call India is almost looks like replica of NTPC. So Call India again trending below all key moving averages. Trend line breakdown already happened. Lower top, lower bottom formation, momentum loss on weekly chart. So there are all the technical parameters are negative. Majority of the technical parameters are negative in this stock. Only one thing I can say from here, that on weekly chart, it current 100-week moving average is placed in the range of 365, and the stock has approached to that zone. So maybe some bounce back cannot be denied. I'm not saying it will happen bounce back, but yes, taking considering that level, that 100-week moving average on weekly chart, which is currently placed around 365, I'm not denying for some bounce back. Otherwise, overall trend, sentiment, everything is negative in this particular stock. So one can expect bounce back, but yes, overall trend and sentiment are negative in this stock also. Apart from that, uh, let's take clean science here, this.
Yes.
clean, clean science. So clean science trending in sideways only. Today again, it has formed a bullish candle, but it took a certain resistance or profit booking at higher level. But good part is that it is hovering around 200 DMA, and from the last 1 month, I can say this 200 days moving average is flat. I can say here, if you see this trend moving average black color here on chart, this 200 moving average is almost flat, and now it is hovering around 200 days moving average, and there is not that much, but yes, there is a little bit momentum improvements are happening on this daily chart. Weekly chart, I can say, is also not looking that much negative. So this is the stock where we can consider a good bounce back or good reversal in coming days. So just keep watching this stock. Maybe trend is building up in this particular stock. Positive trend, I can say. Positive trend is building up in this stock. Another thing is that risk reward ratio. So risk reward is very attractive in this stock. We can keep one can keep stop loss of 300 1380 70 kind of zone, which is hardly 5% from current level, and bounce back, if this ongoing continuation or bounce back will happen in coming days, so one can expect 1600 to 1700 kind of levels in coming days. So risk reward is also looking quite attractive. 1370 is a stop loss, and just keep watching this stock from with positive bias. Maybe 1600 to 1700 kind of zone may be achievable in this stock in coming few days and coming few weeks in this particular stock in clean science.
Let me take few queries.
Okay.
Next, first one is Action Construction. So Action Construction, it's trading in a large consolidation base, and there was a breakout attempt in the especially in the last week of January, and December last week. First week of January and last week of December, there was a breakout which has happened from the downward sloping trend line. But right now, due to overall market weakness, the stock is also facing some sort of correction, and once again it moved towards the consolidation range. So until it's trading in this particular range, so there is no problem. So likely to trade in this particular range itself in the for the next, I think, on next 1 month or so. It depends on the government where the budget, if they give more capital expenditure is likely to higher, then this stock likely to benefit in this particular budget. So let's see what happens. So one can track this particular stock for the budget, and where if it breakout happens on the higher volume, so one can enter at 1630 640 kind of level on the higher side. Next one is GRSC. So GRSC, it's after the massive run, it's trending in the consolidation range. So this consolidation range likely to continue. So if in the budget session, this sector, especially defense stocks, likely to if there is many changes likely which is going to happen in the defense sector, then this stock likely to benefit from that. So one can wait for the level of this small pattern, also on the higher side 100 DMA. So one can, if it breaks out above that level, then one can re-enter this particular stock. But right now, better to keep it in a watch list, and better to track it. So until then, it's a no trade zone for this particular stock. Next one is Aegis Logistics. So uh, day before yesterday, I think on especially Jan 7th, so there was a huge breakout from the sideways trend line, and also there was a double bottom base breakout in the Aegis Logistics. Strong stock, fundamentally strong stock. And from last 2 days, it has retested that breakout level, still trending above that breakout level. So those who are willing to take the risk of some that is around stop loss is around 750 kind of level for this particular stock. So those who can willing to take the risk, one can enter this stock. If there is a strong bounce back from this breakout level that is around 890 900 level, so there's a well and good. So if it not due to overall market weakness, this stock also might be, there is a chances of high probability that from breakout might fail. So better to be cautious. Those who still want to take the risk can keep a stop loss around 50 DMA or little lower around 750 kind of level. Next one is Time Technoplast. So this stock is tracked by MSI. So Market Smith India portfolio. The stock is slightly on the after breakout. It's still trading in the sideways range. But from last, especially today, it is breached that 50 DMA and 100 DMA, and it's better to wait and watch. The volume is on the lower side, so please follow Market Smith India for any change in this particular stock. Right now, it's showing slightly weakness, but better to wait and watch. If there is a bounce back from 100 DMA, then well and good. Next one is Jash Engineering. So strong stock, still trading in this particular after breakout. It's retested that breakout level and still trading above its 50 DMA. So until it's trading above this 50 DMA, then well and good. So if it breaks below that 50 DMA as well as this price cluster, then we might see some more consolidation likely to happen, and stock might move head toward 490 kind of level in the coming days. Any?
Okay. So there is a, yes, you are saying something, Atisha?
No, no.
Okay. So there is a YouTube query. Let's take first that.
Okay.
That is Sarla Poli. So, yes, Sarla Poli overall trend is positive. If you see here that as per O'Neill methodology, there was a rounded bottom formation or cup pattern formation happened about 200 DMA, slope of 200 DMA is positive. But after this touching high level of, uh, I can say target, as per O'Neill methodology target, that is 23%, it is showing some negativity, or I can say showing some profit booking, but still technically it is not looking that much weak. But yes, it is not a right time to take fresh position in this stock. If you are holding this stock, so just keep holding below this 200 days moving average from current level. Currently 200 days moving average is placed around 90 rupees, and this rate is 102 rupees, so almost 10-12% from current level. Base wise, base formation wise, stock is not we are not in favor to buy these kind of stocks, because it's very difficult to keep stop loss, and risk management is a key to success in any particular trading and investing or swing trading, I can say. So maybe a reversal will happen. If reversal will happen, currently it is standing around 100 DMA. Exactly, if we talk about today's price, so today's price is exactly around 200 DMA. Further, today in today's trading session, stock was down around 5%. Maybe it was in seller circuit. So negativities may extend below this 100 DMA and toward 100 200 DMA, that is 90 rupees. So not advisable to buy at current point of time. Just keep wait and watch. If someone is holding this particular stock, so on 200 DMA or 90 rupees is a key level to watch. I can understand that is 10 to 12% from current level, but that is the only strong level is currently visible in this stock. So otherwise, one can avoid for buying purpose. Next is
Aarti Industries.
Aarti Industries. So Aarti Industries, if you see in last 6 months, especially or 5 month, I can say, from August onward, it took strong resistance in the range of 760, and one-sided landslide fall happened in this particular stock. If you see continuously forming from August onward, lower top, lower bottom formation trending below all key moving averages. or almost I can say almost 50% of correction has happened, or I can stock has corrected from almost 760 780 to 400 kind of zone. Today it has gained around 4%. From the last couple of weeks, it is trending into sideways zone, that is in very tight area in the range of 420 to 400 kind of zone, I can say. So some bounce back cannot be denied. Today, at least in this particular stock, it is still trending below 21 days exponential moving average, which is currently placed around 418, 419, and current rate is 414. So after considering all these things and oversold kind of scenario in this particular stock, and the way stock has fallen in last 4 5 months, some bounce back cannot be denied, obviously. And if this today's ongoing bounce back will happen in coming days, so one can expect at least 450 kind of level, that is almost 6 7% upside from current level at least. And then followed by next level would be around 475 also, or 480 also. So 450 to 475, 480 kind of levels bounce back may happen in this particular stock. So if someone is interested in swing trading and everything, so risk reward is little bit favorable. One can keep stop loss around below 200, 400, or I can say 396, 397 for the level of 450 or to 470 or 480 kind of level in this stock. Otherwise, overall trend sentiment is very, very negative. So if someone is taking position or swing trading point of view, so just follow strict stop loss in that particular range for the level of upside of 450 to 470 kind of zone. Next is
Next is Castrol India.
Castrol India. So Castrol again, negative trend, trending below all key moving averages. Last time, a few weeks back only, it took resistance around 200 days moving average in the range of 220 to 25, and again it is falling. Uh, Bounce back, little bit of bounce back may happen, not denying for that, but after looking multi-time frame chart and everything, it is advisable to avoid this particular stock at current point of time for buying purpose. So avoid from our side.
Next one is Reliance.
Okay, Reliance. So disclaimer is that we are already recommended in short-term trading portfolio. And nowadays, at current point of time, at current level, there are a lot of talks are happening in the street, in the market about Reliance, that Reliance is the good candidate to buy at current level. And technically also it is showing some sort of short-term reversal. On the hope of that only, we have also added in the TraderSmith portfolio. Don't know what will happen. Risk reward is looking attractive, even though technically stock is not that much strong at current point of time. But there is a improvements are happening, at least short-term perspective. So let's see how things will improve. Stocks are at least at current point of time is short-term point of view is looking some sort of bounce back in Reliance.
Next one is
One person,
okay.
sorry,
Sorry. You are
okay,
saying
no worries, sorry. So one person is asking how to add moving averages in MarketSmith. So can you show Lisa, please? It
okay.
is very simple to add.
Okay, so let me remove. So those who are see if you see the chart setting over here, so you can go to moving averages and you can select whichever moving averages you want, and you can tick blue tick and save changes. It will show
And one can select SMA or EMA also
EM
here
also.
from.
So that is also you can change it over here. So whichever you want, you can change the settings, make your changes and save the changes.
Yes,
Next one is Davis Laboratory.
Device Lab. So Device Lab, again, pharma stock. Uh, Currently, pharma selective pharma stocks are looking attractive, but not Divi's Lab. Divi's Lab is not looking that much attractive, even though overall trend is positive, no doubt in this Divi's Lab. But if you see from the last 3 months almost, stock is trending into sideways only, and that zone is approximately 6200 or 6300 in upside to almost 5700 kind of zone in downside. So 5700 in downside, suppose it will bounce back from that particular zone, then one can say again it will be ready to move toward 6300, 6400. So currently it is trending into sideways only. Let's see how things will improve in coming days. It is showing little bit of momentum loss on daily and weekly chart both. Like if on weekly chart, MACD is showing negative crossover. This weekly RSI is showing certain negativity in Divi's lab. So, but yes, strong support is placed in the range of 5700. So possibilities of bounce back may happen after touching 5700 or around 5700. But suppose it will breach 5700, then maybe there will be big crackdown happen in this particular stock. So just keep watching level of 5600 to or 5650 to 5700 and see, wait and watch how things will improve in coming days. Time being, at least for today or couple of days perspective, try to avoid. Suppose it will take support around that and big bullish candle formation happen in this stock, then only I would suggest to buy. Otherwise, avoid. At least for today, whatever data available at current point of time.
So let me take few queries.
Yes.
Keynes Technology, the strong stock and the strong fundamental stock also. So recently, if you see recently IPOs are coming in from all this. So that is the reason Keynes Technology is a big key beneficiary over here. So right now, it's those are willing to take a fresh position can avoid this stock right now, and those are already holding from the lower level. Either one can book partial profit at current level or wait for the at least break below this 50 DMA. If it breaks below this 50 DMA, one can at least book partial profit. And if it breaks this 100 DMA, then one can clearly exit from this stock and book profit at least. And the strongest stock, those who are willing to better to wait for the another base to happen and enter it there. So right now, it's better to avoid. Next one is Aarti. I think it's done. And next one,
Article.
Samhi Hotels. So hotel stocks are doing well, but this is a small companies like small hotel companies are still trading in the sideways range. And if you see the price cluster range and price action from the last almost the base is happening. So better to wait for this breakout level that is around 210 to 220, which is a key resistance level for this particular stock. The strong sector and strong stock on the fundamental side. So better to wait for this level 210, 220 is a key level to watch. So until then, it's better to wait and watch. And the downside, those willing to take the small risk, then wait for this 200 this 50 DMA as a stop loss, or else the brace level which is happening over here, that is around 170 or 179, 180 kind of level is a better stop loss for this particular stock. Next one is Arcade Developers. The recent IPO. After that IPO, it is made of base IPO based formation, but right now it's still trading in the sideways range. So better to wait and watch. So once it breaks out above this IPO price cluster range, so that is around 188, 190. So once it breaks out above that level, then one can enter this particular stock. So, but right now, better to avoid, or else it is likely to this base formation likely to continue and make another base called consolidation. So let's wait and watch. So the key level to watch is 190. Next one is Newgen Software. So it was a one-sided rally, except especially in the IT sector. The rally which happened in the last December month, especially on the guidance, there is a strong guidance. So IT stocks have been gained, and we can see the rally in the new gen software. But after it's touching that 2025 mark level, so its the stock is facing some sort of profit booking at the higher level. So it's better to wait till the breakout level, that is around 480, 500 is a key level to watch. So if it breaks below that level, then there might be a further profit booking, and the stock might hit towards 50 DMA as well as 100 DMA in the coming session. Next one is HPL Electric. So again, disclaimer: the stock is holding in MSI portfolio. So we have added on the basis of breakout. So still it's trading in the sideways range of breakout. So better to wait for the MSI to follow whatever going to happen. So still trading above this 200 DMA. So there is no problem until then. So better to wait and watch in this particular stock. Next one is alkyl amines. So once again, stocks, especially today's trading session, all the chemical stocks have been gained. So that is one of the reason. And here, those are willing to take the risk, trying to pull back, trying to get the reversal. So one can initiate a buy position. The stop loss would be this swing low, that is around below 1700. So one can enter this and ride this rally. So stock might face resistance around 2200, followed by 2400 kind of level in the coming session. Dixon, I think, okay. So the strong stock, and once again, MSI portfolio stock, it's from last couple of days, we have seen profit booking. So until it's trading above its 50 DMA as well as 100 DMA, it's well and good. So once it falls below this 100 DMA, then we might see there is a concern. Those who are willing to take partial profit, then one can initiate a partial profit at current level. Those are already bought, but fresh entry at current juncture can be avoided. PG Electroplast. So here also strong stock, fresh entry can be avoided, and those who are already took the position from the much lower side, then one can wait for the level of 50 DMA or 100 DMA to book at least partial profit. So until then, it's kind of it likely to head towards 50 DMA. At least it will take a support around 50 DMA and continue its rally. But right now it's wait and watch. Think Ashoka Build. So once again, disclaimer: model portfolio stock from MSI. We have added on the verge of breakout from this consolidation base. So after that base is still trading in this particular sideways range. So there is no concern about this particular until it's trading above its in this particular base. So better to wait and watch. So fresh entry can be taken once it breaks out above this this prior high, that is around 310 kind of level. And at current juncture, it's better to wait for the breakout level anything happen on the higher side. On the downside, it's trading well above 100 DMA, then there is no problem. Bombay Dyeing, a textile stock, so it's making lower high, lower low price structure, and fresh entry can be avoided, and better to it is likely to trade in this particular range itself in the coming session. So any breakout above this downward sloping trend line, then that can be a very good buy. But until then, it's uh, one can avoid this stock. Fluorochem, again chemicals stock. There was a huge bounce which has happened on the higher side, but it closed on the almost flat, or it's gained around almost 1%. So it's not so good, not so bad stock. So it's like better to wait and watch. If it breaks about this upward sloping, downward sloping trend line, then better to enter at that level and with the stop loss below this upward sloping trend line with the stop loss of prior low as well. So better to wait and watch. So on the key level to watch over is 4,350 kind of level. Jubilant Engravia. So here, stock is made an attempt to break out, but after that breakout, it's on a verge of breakout, likely to be faded, and It's holding that 100 DMA as well now, right now. So if it doesn't close below this, close above this 100 DMA, then we might see once again that this consolidation likely to be for this particular stock. So on the upper side, the close below 850, 850, 860 is a key level to watch. So once it closes above this 850, then one can enter. But until then, it's better to wait and watch in this particular stock. And Zentek. So strong stock. After that, 25% power to pivot level, sorry, 32% power to pivot level. Stock is still trading above that range. So those are already holding from the lower level. Then continue to hold with the stop loss below it's a 50 DMA as well as this price cluster range. So that is a stop loss level for this particular stock. So fresh entry can be avoided in this particular stock right now. I think we have.
Okay.
Yeah.
Yeah. So Tisha has covered maximum number of stocks in speedy manner. Now, only one stock that want to take, that is YouTube query, that is EPL. And there is a news update regarding Q3 numbers on TCS, and we will discuss and we will wrap up the session in next couple of minutes. So let's first discuss EPL. So EPL currently trending with negative bias from the last couple of weeks. Now from current level, 240 is a key level to watch, and most probably it will breach that 240 level also, and may be ready to move toward 225, 220 kind of zone. So maybe negativities are there, and it may extend further toward at least 200 DMA, which is currently placed around 230, 225 kind of zone. Okay, so TCS, I was just reading the news regarding the TCS has reported Q3 number, and order book is quite attractive. It is highest in, I think, last 5 fiscal year. First thing. Another is that not profit rose by 12%. Beats market expectation, revenue and everything is good. So let's see how things will happen in coming days or maybe tomorrow morning. Maybe after looking the prima facie numbers, whatever available in front of me, yeah, it looks like maybe TCS will open with gap up opening in today early morning, tomorrow early morning. TCS chart currently, if I talk about charts point of view, so chart is this trending below 200 days moving, 200 days moving average. Today also it was remained traded below that only. So maybe let's see how things will develop in tomorrow morning. After looking numbers at least prima facie point of view, that maybe TCS may give good gap up opening in tomorrow's morning session. And we are hoping that maybe TCS will lead the entire sector and IT sector, and maybe some positivity will be there in the sector. So it's uh, almost 5:45, 5:47. So let's wrap up the session. Thanks for joining the session. Thanks from our side. If someone queries, where we try to capture maximum queries, but if someone queries were unanswered, so you can write us, or we will try to reply on priority basis, or maybe we will try to cover in next Bazaar Pe Charcha on priority basis. So thank you for joining. Have a great day. Have a good trading session. From tomorrow onward, have a good calendar year, profitable calendar year 2025 to all of you. Thank you. Let's stay tuned with us in next Bazaar Pe Charcha and various other formats like Stock Darbar and all. So know more about informative information about market. Thank you.
Yeah, everyone.
Yeah, thank you.